Hi everyone, welcome back to Corporate Decoder. Today we're diving into a report from Paramount Global. Did you know a global media giant could need to tweak its loan agreements? Well, stick around because that's exactly what we're uncovering today. We will decode what the filing is about, what that means, and what could be the consequences. Paramount just made some changes to their credit agreement, basically their loan deal. It seems they needed a little more wiggle room in how they manage their money and calculate their debt. This could mean a lot of things from preparing for future investments to dealing with current financial pressures. Let's get into the details and see what's really going on. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you're into discussing about what's really going on behind the scenes. This is a Form 8K filing, also known as a current report. Companies use these to announce major events that could be important to investors. Think of it as an, something's happening report, but not necessarily bad, just important. This report was filed May 12, 2025. The main event here is that Paramount entered into something called Amendment Number 5, which changes their existing credit agreement. A credit agreement is basically the contract they have with lenders for their loans. So Paramount changed the rules of their loan. This amendment involves Paramount, the banks and other lenders who have loaned them money, and JP Chase Bank acting as the administrative agent, which means they're in charge of managing the loan. This is all related to an older agreement from January 2020, which has been changed a few times since then. So what exactly did they change? There are two main points. First, they increased the amount of cash they can have on hand without it counting against their debt calculations. The limit was previously $1.5 billion, but now it's $3 billion, 30 in dollars, $3. You have a mortgage, but also a savings account. This is like saying you don't have to count your entire mortgage as debt because you have some savings to offset it. This gives Paramount more financial flexibility. Second, they changed how they calculate their earnings, specifically something called consolidated EBITDA. EBITDA is earnings before interest, taxes, depreciation, and amortization. It's a way to measure a company's overall financial performance. The change allows Paramount to add back some expenses to their EBITDA calculation, specifically expenses related to restructuring, business improvements, lawsuits, environmental issues, and losses from selling off parts of the company. There is a limit of 15% on how much can be added back. This can make their financial performance look better, at least on paper. The filing mentions previous amendments to the credit agreement from as far back as 2021. All these amendments show how Paramount has been tweaking its financial arrangements over time. You can find the full text of the amendment attached to this filing. If you're really interested in the fine print, you can go and read all the exact details. This section lists the exhibits, which are the documents included with the filing. The important one here is Exhibit 10.1, which is the actual Amendment No. 5 to the credit agreement. This is just a link to the actual amendment document. This is the signature section where an authorized officer of the company signs off on the report. Tatso, what does all this mean? Paramount is basically adjusting its loan agreement to give itself more financial breathing room. By increasing the cash limit and tweaking the EBITDA calculation, they can manage their debt and show better financial results. Ops team now. Let's look at what this could mean for Paramount overall. On the one hand, this could be a smart move, giving themselves more flexibility with their cash, and EBITDA could help them invest in new projects or deal with unexpected costs. It could also make them look better to investors. On the other hand, it could be a sign that they're facing some financial challenges. Maybe they're having trouble meeting their debt obligations, or maybe they're worried about future losses. Tweaking the EBITDA calculation could also be seen as a way to make their financial performance look better than it actually is. Ultimately, it's hard to say for sure without knowing more about Paramount's specific situation. But this amendment does raise some questions about their financial health and strategy success to assessment of Paramount direction. Paramount seems to be navigating a complex media landscape, and this credit agreement adjustment reflects that. A strength here is their proactive approach to managing debt and finances. However, a potential weakness is that these adjustments might be needed due to underlying financial pressures or notable risks and opportunities. A risk is that the increased financial flexibility doesn't solve fundamental business issues such as declining viewership or competition from streaming services. An opportunity is that these changes allow Paramount to invest in new content and technology, positioning them for long-term growth. I've Logunjo. Paramount's amendment to its credit agreement is a noteworthy event. It provides them with more financial flexibility, but it also raises questions about their underlying financial health. Investors should keep a close eye on how Paramount uses this flexibility and whether it leads to improved performance. Alright, that's our breakdown of Paramount's latest filing. What's your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description if you are interested about what's really going on behind the scenes. Thanks for watching. See you next time.